Why more sanctions on Russia will hurt the United States. Next on the Energy News Beat Stand Up.
Why hasn't Trump hit Russia with more sanctions? Well, because it would hand the midterm elections to the Democrats is one good reason. Michael, I've been seeing this all over the place. This is critical. A push for peace talks over punitive measures. At the heart of Trump's approach, his stated desire to broker a ceasefire deal in Ukraine, reports indicate that the president is wary of imposing new sanctions, fearing they could derail delegate negotiations with President Vladimir Putin. Trump has repeatedly emphasized that sanctions might harden Putin's stance. This is not all true. Here's where it is really true, and that is if the sanctions are put in place, I'm going to go through two main scenarios. If the sanctions are put on China's refineries and India's refineries for secondary sanctions, that will have an economic boomerang. If President Trump ignores that and kind of goes along and gets to get this done, that's the real winner right here. The domestic problem that we're going to see, Michael, is the fact that energy prices and the OPEC announcement you just alluded to are going to be very impactful on the oil and gas. If President Trump puts in the tariffs, we have this real problem. Here's where it gets ugly. If Congress tries to step up and force sanctions on President Putin, they're going to meddle in this and really make it ugly. And there's rumors it's about to happen. This is bad.
Yeah, I think you bring up a good point that sanctions don't always lead to the desired outcome. They're second, third, fourth order effects. I mean, we've had now sanctions on Russia going back since the invasion. They haven't quite seemed to work. And so really, as you bring up, I think accurately, what is actually going to cause an end to this war and what is actually going to bring some sort of lasting peace. I think Trump is on it. Now, I don't think personally, I don't think Putin is negotiating in what I would say fair terms, or he's negotiating in good faith, because on one hand, he's saying, yes, I want peace. On the other hand, he seems to be amassing more troops left, right, up and down on the border. Ukraine is now responding not to what Putin is saying, but what he's doing. And so there begins to be this intellect. I mean, Stu, we deal with this all the time when we're negotiating oil and gas deals. Somebody says one thing, but their actions say something else. And it's up to people in the middle of the negotiations to figure out how to bridge the gap and really thread that needle, So it's no different than I think what Trump is dealing with when it comes to Russia. But I overall agree with your consideration that sanctions won't work. My real question to you, though, is if these sanctions don't happen, what effect is that going to have on the oil markets? Because obviously Russia is still able to get a lot of their oil out via the dark fleet. These sanctions would, I assume, come in to try to cut and choke that supply off. We just saw your favorite Senator Lindsey Graham in Ukraine saying that they're going after China on a 500% tariff for buying Russian oil. I mean, is that what's next? Where do you see?
Yes, and that will win the Democrats the House and the Senate if Lindsey Graham gets his ways. Honestly, that is absolute. That man needs to be primaried and run out of town. And that is absolutely pathetic. That man does not need to be a senator. My bully in the backyard called me up just as we were starting this podcast, and he goes, moo, 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 as I said the other day. Stu, hey, it's still a bull. And the OPEC has lost, and OPEC Plus has lost the ability to really control the market. They're an ineffective cartel. And it is because Russia, Venezuela, Iran, Iraq, and several others have gone through, and they are able to print money by printing oil, by drilling for oil and gas. That is their revenue source. And the dark fleet is well over 1,500 tankers right now. You can sanction them. They just cripple a few others, bring them in, and Panama is even trying to stop this. Norway now has a whole new group of folks lining up on there that Russia's running up on Norway's border. This is ugly, and President Trump does not have all the information, and we got to keep old warmonger, what's his name, out of negotiating this stuff because all he's going to do is muck it up.
Yeah, no kidding. No, we're out on Lindsey Graham, theme from that segment. All right, what's next?
He is a warmonger. Oh my gosh. Let's go to this article. I enjoyed writing this one. How the grid is changing, but investing in electrical utilities and oil and gas companies to boost your portfolio. Michael, I watch trends, and this is one I really had fun. The grid and changing investment opportunities. The grid's evolving with focusing, integrating renewables like solar, wind, which now account for 30% of the electrical generation, but at what cost? This shift is driven from demand from electric vehicles, data centers, and industrial electrification from projects of 4% annual growth through 2030. That number is low. Electrical utilities are investing heavily in grid monetization and electrical storage. The grid, Michael, is now changing to a decentralized way. And my new series on AI and the generation, AI and the data centers and AI and energy is going to be critical because we're going to be watching energy management systems changing at worldwide speeds like you've never seen before. Now, this opens up investment. Listen to this. Utilities are responding with record capital expenditures expected to reach 174 billion by the year 2024, with 42% allocated to transmission distribution lines, according to Deloitte. But now, why invest now? Diversify. There are utilities are some of the best ones on the market right now, Michael. I don't give advice, but I'm just telling you what is out there. But you can also invest in oil and gas because they're giving back to their stockholders. And then I also talk in here just real briefly, what's the difference between investing in a public company and a private oil and gas company? What's that difference, Michael?
Well, the big difference is your relationship to oil price appreciation. If you are an oil and gas bull, if you're Stuart Turley and believe Goldman Sachs is wrong, in which prices are going to go down, Stu believes prices are going to go up, you should attempt to find an investment strategy that ties you specifically to the price of oil. Now, obviously, you don't want to gamble on crude oil futures. It's really hard to actually gamble on the price of oil. And I say gamble for a reason because nobody should necessarily be trading crude oil futures. I mean, you can, but you also shouldn't. I don't give investment advice. But what then you should do if over the next 6 months, your thesis is prices will go up, finding an investment strategy that allows you to participate in the appreciation of oil and gas prices, like investing in private oil and gas companies whose revenue are not associated with how the capital markets feel about them, but directly with how much revenue they create, which is a function of how much oil and gas production they have and the price of oil.
Well said, Michael. In fact, you must have read the article. Well done.
Yeah, it's almost like we've been saying that now for 5 years.
Almost. Hey, let's go to the next story here, Michael. Hybrid cars, a fuel saving bridge to the future, or a political outcast. Here's one I want to throw at everybody. Should President Trump consider tax credits for hybrids built in America? And I think so. This article I wrote this morning in response because with the staff put out this morning, the great interview with Mike Umbro and Ronald Stein on the energy crisis caused by Governor Newsom's policies in California. And he has now created a national security crisis. So I started thinking, what's the big deal and why can't we get behind the hybrid? Michael, BYD, Toyota, Hyundai, and Ford have all simped out. They get over 50 miles per gallon on BYD, Toyota, and close in Honda. Ford is getting over 45 miles per gallon. That calculates into gigantic gasoline savings. And if we took a look at why don't we put those in there instead of worrying about, oh, you have to drive a full EV, which will crash the grid, why don't we look at saving, not burning oil and gas? That would have a greater impact.
Yeah, I love that chart you put in there, which is 2024 hybrid sales average fuel mile per gallon by manufacturer. I think it's very fascinating. You can see BYD is crushing it. I always tend to think, Stu, we've got to let the free market decide. I believe that hybrids are the way of the future. I think you believe that as well. But if that's the case, then the free market, the Adam Smith's invisible hand that guides the market, the market will eventually land on hybrids being the option. You'll see more companies start manufacturing them because there's demand for them. And that's the key. Demand will always come, not always, but generally comes before supply, because as companies see and react to what their customers want, that then begins to tailor. Obviously, there are certain things that you need to have some, there's this idea of you have to create a market before people will come. That is, I think, the minority, whereas the majority of times there's a demand for something and then companies react to that. So do I think we should have subsidies on US made hybrids? No, I don't actually. I think there are, if the government is going to get involved in the economy, I don't think hybrid cars constitute as national security or national importance. It's just that's what smart people I think are going to start doing because of the fuel mile per gallon.
Well, I like your point. That is an outstanding point. But one of the things I do want to say is I think we're going to see the EV market come to a complete and utter change. And I think Tesla will be the survivor because Tesla is not just a EV manufacturer, it is a technology company.
Yeah, I'm not going to go. Yes, they are a technology company from the standpoint of what will most, in my opinion, what you will see is once they achieve, they call it FSD now, full self-driving. It's not quite full self-driving yet. It really is. I mean, I've been in Ubers where the driver is in a Tesla and they say, "Hey, do you want to see the full self-driving one?" I say, "Yeah," and they flip it on, and these people are turning around, talking to me, hands are off the wheel. It's pretty incredible, actually. So it really is full self-driving. So the point is, I think that technology will eventually end up being licensed to other companies like Ford, like GM, so that they can integrate that into their cars. Now, the part that I find interesting is that how Tesla creates their full self-driving is by the use of cameras. Most companies don't use cameras. They use sonar. And there's a reason why Elon and Tesla went down the camera route and other companies went down the sonar route. It has a lot to do with money and time. But from an accuracy standpoint, you can't lie and say that cameras are better than sonar because cameras see everything. If a ball, if the classic, you're driving down a road and a little kid's basketball runs onto the street, well, sonar might pick that up. It might not interpret it quite correctly. Whereas cameras, I mean, you have the image. So now you just have to train the image on recognition. There's another suite of problems there. But in the end, in the long arc of how this technology is going, I think the camera system will win, which is why I think Tesla will win when it comes to full self-driving and why I agree with you. I think in the end, Tesla will win. I don't think they will migrate away from the electric vehicle aspect of it because I think what and Elon understands is that, I mean, he is oddly in still on solar, which I think there's a discussion that needs to be had with Elon about his love for solar. But EVs in and of themselves aren't bad. It's just don't think that buying an EV is making you green because you're plugging it into a grid that's 70% powered by fossil fuels.
Yep. And it's adding more burden and insurance cost. So let's go to the next story here. Last story for me on this one, Michael, today. Trump emergency order halts a power plant closure, a win for energy reliability. I got to hand this to Secretary Chris Wright again. Again, he's hitting it out of the park. President Donald Trump has issued an emergency order to prevent the closure of a second power plant, the Eddystone Generating Plant in Pennsylvania, operated by Constellation Constellation Energy Group. This decision announced May 30th comes days just after a similar order kept the J.H. Campbell power plant in Michigan operating past its scheduled shutdown. Both highlight the administration's focus on bolstering energy reliability amid demand grid stability concerns. Michael, the grid is in crisis mode right now. And crisis mode, after my analyzation of what is going on in the next few years on our grid, we got to keep every power plant we can open. And this just shows the smartness of the Trump administration getting this done.
Yeah, I agree. I think the fact that they're halting this from closing, as you said, is a win for energy reliability. I think the Trump administration is taking the right approach that American energy dominance is national security. And I think this entire idea flows into, I think, what I want to talk about when we get to OPEC, but I'll save that for. I love how you highlight this. It's really a race against blackouts. I mean, we saw ERCOT and the FERC come out and say, hey, we're pretty sure we're going to have a few days when demand's going to be bigger than supply. I mean, that's scary. That should freak people out.
Okay. Do you know what the difference between Spain and the United States is?
Spanish?
We have Secretary Chris Wright and President Donald Trump.
It's true.
They don't.
It's true. It's true. So, all right, well, let's jump over and touch upon some oil and gas specific things, guys. Before we do that, quickly, let's pay the bills. As always, news and analysis brought to you by energynewsbeat.com, the best place for all your energy and oil and gas analysis. Go ahead and hit that description below. All links to the timestamps, links to the articles. Check us out, theenergynewsbeat.substack.com. It's probably the best place to find our original thoughts when it comes to all of these different stuff. We drop one crisp, clean post a day, which walks through some of our feelings on some of the latest happenings in the business. This week will also be releasing our first in our oil and gas research, where we become your personal oil and gas analyst. The first one is why IRR is a scam, and I have some really very interesting charts to show you why I think everyone who's using IRR to evaluate oil and gas projects is doing themselves a disservice. So check that out, theenergynewsbeat.substack.com. Also, thank you to Reese Energy Consulting for sponsoring the show and making it possible. We love Reese Energy Consulting. Guys, if you work in the midstream space and you need help with anything, they're a great resource. They've worked with every company from one guy in a garage all the way up to the biggest publicly traded companies in the midstream space. So they have experience at all different levels. If you're in the upstream space and you're not working with an oil and gas marketing company, you're losing dollars on dollars on dollars not working with a marketing company, from the standpoint that they will go out to your first purchasers, negotiate better contracts. They will go to your purchasers, get you dollars back on all the barrels you sold. Highly recommend. We love Reese Energy Consulting, reeseenergyconsulting.com. Tell them Energy Newsbeat sent you. And finally, guys, investinOil.energynewsbeat.com is a great place to go if you're wondering if you should be adding oil and gas to your portfolio. We have a great survey that's up there where it walks through where you think oil prices might go, some of the other considerations that take, and in the end, it tells you, do you think is oil and gas investing for you? And at the end of it, once you fill it out, we send you a great ebook that walks you through kind of all the different which ways you can invest in the oil and gas business. So check that out, investinoil.energynewsbeat.com. But Stu, let's jump over and quickly touch on some top line indices here. S&P 500 flat, NASDAQ was flat, 2 and 10 year yields down 1% and 0.6 percentage point. Bitcoin has fallen a little bit. It's still sitting at 105 at 105,000. So falling is relative. Crude oil was down about 0.5 percentage point on Friday, 60.79. Brent oil was down 2.1 percentage points, 62.55. We're down $1.35. That spread between Brent and crude oil is actually getting very close, which is something very interesting here. Natural gas sitting at $3.46. That was down about 2 percentage points, or about 7 cents day over day. XOP, which is our E&P securities contract, was down 1.35 percentage points. The big news on Friday, though, was the market was bracing for a possible OPEC output hike. That week over week was down about 1% on WTI. Mainly that was the market was reacting to that. And we will lightly touch on what OPEC decided yesterday. But we also did see rig counts drop by 3. Interestingly enough, Stu, we did see the frac count spread increase by 4, which means there were some frac rigs added back to the market, which is the first time really in a month we've seen that, and a little bit different than I think what people are expecting. I mean, with rigs dropping and frac rigs coming back online, to me, what that's signaling is that there's either, to me, what that signals is this is most likely the big oil companies negotiating massive discounts with their frac providers. I mean, I think there's very little reason to believe that smaller oil and gas companies who are buying what are called spec frac rigs, which are, they're just not speculating, but they're called spec rigs from the standpoint of they're just going out and fracking one well at a time and then sending that and releasing that rig somewhere else, versus these larger companies where they're negotiating, hey, we're going to go buy, Liberty rig, Liberty Crew 4, and we're going to get them for 10 different, the next 10 wells we're going to frack, and they're renegotiating discounts. So I have a good sense, talking to my industry connections. Stu, you're not the only one with connections in this business, that's more the case relative to why the frac count spread has increased. But nonetheless, great to see, as on Friday, the market was reacting to what OPEC was going to do yesterday. We did find out, in fact, OPEC is going to increase oil production by another 411,000 barrels per day as they begin to continue to unwind cuts. What everyone is saying, Stu, and this is where I have a little bit of beef with the overall media, and I have a little bit of beef with just kind of your fly-by-night analysts, people who haven't necessarily been in this business for that long, reporters, or people who just, cover the surface level, is there's the same old quotes that are being thrown out there. Oh, OPEC's increasing because they want market share. OPEC's increasing because they're trying to hurt other nations. I think possibly number two is more correct. I don't believe OPEC is worried about market share at all in this point. What I believe, and I think what the tea leaves are reading, is that OPEC is doing this to appease America and appease Trump. If they can give Trump his $55 oil, Trump then in turn, and this is not a quid pro quo, but more an unspoken, hey, OPEC has the ability to drop prices as low as they want. They'll drop prices to Trump's stated goal, friend of the show, Chris Wright, stated goal of $55 oil. Then in turn, it makes it a lot easier for these Gulf states to do business in the United States. What have we seen in the last 2 weeks? Trillions of dollars of investment now in our energy infrastructure, which I'm saying I'm not actually theoretically very much into, because we talk about energy security, and now all of a sudden we're letting all of these foreign countries own our national security infrastructure. If we truly believe energy is national security, we probably should be worried about that. But I've complained about that enough, where I think that the reason why OPEC is increasing production is because they want to throw a bone to America, and really a bone to President Trump, so that somewhere down the road, whether it's they can get access to more arms in terms of military technology, whether the Abraham Accords come back, but give Trump a bone so that later on down the line they get something in return. And I don't think it has much to do with oil specifically as it does to do with appeasement on their end. What say you, Stu?
I can see your point, but I also think that they do not have control over their producers. I'm going to go a little bit more simply that whatever they do, Russia, Iran, Iraq, Venezuela will pump as much as they possibly can in order to fill their coffers, whatever they need. So I think that there have been a lot of talking heads out there that have said OPEC may be gone as a cartel. So I agree. I like where your thought process is going, but I think it's simply they don't have control.
Well, and that's more reasonable than they're trying to put U.S. shale out of business. Anybody who says that, which is, if you read our friends over at Reuters, you go read oilprice.com, that's what they,
Yeah,
great. That's level one. That's level one of just, oh, that's what they said in 2016. Well, it's not 2016 anymore. It's 2025. We've moved on now 10 years down the road now. We got to come up with a new shtick. And I think the shtick is, yes, there's overproduction, but let's not mistake, OPEC is Saudi Arabia. Saudi Arabia is OPEC. I mean, there's really, if Saudi Arabia doesn't want OPEC to exist, then OPEC doesn't really exist. So I think Saudi Arabia wants to curry favor with the Trump administration. And in doing so, if they can help drive oil prices to Trump's stated goal of 55. They believe it'll help them down in the future. We'll slightly disagree on that, but that's where I
Let me
think he leaves.
can I throw this as a thing? Saudi Aramco is looking at bringing on debt so that they can pay their portion of the kingdom's money right now. So as Saudi Aramco is looking to take on debt, the only way the Saudi leadership would allow that to happen is if they firmly believe oil prices are going up. And that's one of the key reasons that I think that my bully in the backyard's going, look at Saudi Arabia. They may be borrowing money to pay their kingdom price. Oh, well, do they do anything for that? No, that's a short-term pain, and they know oil's going up.
Well, absolutely. And I think that would accurately play into my thesis that they're not doing this for market share. They're not doing this for any other reason than currying favor with the Trump administration. But that's definitely something, Stu, we need to be watching and paying attention. Finally, guys, on the oil and gas investment front, EOG Resources grows its Utica operations with $5.6 billion Encino Energy Acquisition. This is from our good friend of the show, Nathan Hammer's Substack. I'd highly recommend you go check out and subscribe to his Substack. He's does some awesome stuff. So EOG, what they did is they jumped in and bought Encino Energy. So Encino Energy is a privately backed oil and gas company operating in the Utica, which is actually next to the Marcellus on the East Coast. Ironically, you know who the biggest shareholder in Encino Acquisition Partners, which is the holding company, is, Stu? Who do you think it is?
Warren?
No, the Canadian Teachers Pension Association.
I did not have that on my bingo card this
No,
morning.
no, 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 no. But it goes to show everyone in Canada is anti-energy, anti-energy. Yet there's still some of their largest investments are still in energy. So they cash out big. They had 600. EOG in this acquisition acquires 675,000 acres in the Utica, which brings their total up to 1.1 million acres to develop. There was also some very interesting points here that Nathan brings up. This is a huge boon for the local economy. It's expected for EOG to also raise their dividend to $1 per share. It's something we talked about in the second story, Stu, about why investing in oil and gas is interesting. If you are a dividend-focused stock investor, if we go back to the second article, Stu, I just want to point this out in the research that you showed. S&P 500 average dividend yield is 1.5, where energy dividend yields are 3 to 4%. So you have a much better opportunity of investing in companies with dividends looking at energy than you don't. I do think this is really interesting. It's an all cash deal. They're going to fund it specifically with 50% of cash on hand and 50% debt, but it's a great liquidity event specifically for Encino Acquisition Partners and our good friends at Canada. I know we make fun of you guys a lot, but we love you. We love you up there. EOG has been sort of waiting to make a acquisition here. The quote from CEO Ezra Yacob: "This deal brings together prime land in the Utica, making it a key part of what we do at EOG. It helps us grow our ability to produce energy in smart, sustainable way." Wow, IR guy of the week right there for whoever made that. Produce energy in a smart, sustainable way. IR guy of the week right there. Holy smokes. And what's very interesting, though, is that EOG is going to have a basically 20% more control in how the Utica is developed, which is super interesting. As we know, EOG is one of the largest private operators in the space, so they're going to be able to continue to push this. So highly recommend checking this article out on Nathan's Substack, and I think this will be a very interesting one to watch. Stu, time for my favorite segment of the week. What are you worried about coming up?
I'm really not worried about too much right now. I'm watching when my bully in the backyard is going to be right. So I think it's a few months out, but I think we're on track.
I love it. So with that, guys, we're going to go and let you get out of here. Get back to work. Start your week. Appreciate you starting with Energy Newsbeat. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.